Hello, today is April 9th and I am recording after the stock market has closed. During the middle of the day, there was a news about Trump pausing all the tariffs and the market went wild. And I want to use Apple that I reviewed yesterday to see what has changed and what is likely to happen next. From nowhere, there was an announcement saying that the tariffs got paused, and Apple went wild. I think it was in the record books, like the highest move in the last X number of years. Whenever these type of moves happen, I've seen two schools of thought. When someone dismisses this as a pure short covering rally because of the sudden news, everybody was short and it's just a short covering rally, it will fade away. That is one school of thought. And there is a second set of traders who became ultra happy that this massive rally happened and they made a lot of money. Just by how they express, you can say if their underlying position is overall short or long. So who is correct? First, all market reversals, especially when there is brutal downside, always starts with a short covering. The key question is whether the big investors and hedge funds and all those guys pile on and make this a lasting rally. It's below 200-day moving average and it's below 50-day moving average, and the 50-day moving average has crossed below 200-day moving average, which is common way they call it as death cross, and the TTM is just showing some signs of life. I saw some news saying that there are some alerts saying that this is a sustainable rally. I do not know. You as a trader should also have your own beliefs and go by that and not try not to get influenced by others, including me. But let me explain what I think. So until and otherwise Apple continues to rally, it has to go and fill this gap and it has to cross the 200-day moving average. For all practical purpose, if you want to buy and hold it for a long time, you have to wait, because I already got a couple of friends who had asked me, is this a bottom? Well, it could be, but I'm not sure and I don't know. So, but one thing is, if the stock can go above 200-day moving average and stay there, then yes, it can become a trending rally and the reversal or the bear market is over. But as of now, it's too early to say, and I'm going to draw some fib levels to see what could be next. I am not drawing a fib level for the daily, because daily is well below 200, and until and otherwise it crosses there is no real long-term trade. Yeah, you have intraday trades and those things you can do, but there's no buy and hold until it is above 222. Let me go to the weekly chart. This is the weekly chart of Apple, and let me draw a fib level between the high and low and see where it takes us. So approximately it can likely go to 220, 215, and or if the rally fizzles off, it can go to 161. But I think I will not give any bias to a long side or short side as of now until the daily chart gets some symbol of control. Trading is a difficult pursuit. If someone tells you or makes you feel that making money in the stock market is easy, be cautious. It is a skill, and like any valuable skill, trading must be learned, practiced, and refined over time. That's exactly why I created this web-based training program. You can learn at your own pace, and I have packed it with every tool and strategy I have personally used, when to use, how to apply, and when they work, etc. Check out the link below. I know how difficult it is to be unguided in the stock market. It is frustrating and you learn with expensive losses. Take a look, and if it is not right for you, there's a full money back guarantee. Try the coupon code YouTube that drops price to less than $100. I trust and I promise it will be a useful tool. Thank you.